Let me ask you something deep and personal. When was the last time you walked away from your charts feeling genuinely okay? Not relieved, not lucky, just okay. Knowing you did what is right. Because here's what most struggling traders experience almost every single trading session. You sit down to trade. You see your setup. Clean. You take the trade. And the moment you're in, something shifts inside you. Fear creeps in. You start watching every tick. Every candle feels like a threat. You tighten the stop. You second guess. You exit early and watch it run without you. Or you held too long and gave back everything. And the brutal part? You knew better. In fact, you may even have a set of rules that prohibits you from doing what you just did. But you did it anyway. Because that gap between what you know and what you actually do when real money is on the line, that is not a strategy problem. That is not a risk management problem. That is something far deeper than you've been told. And today, I'm going to be honest with you about what it actually is. But before then, let me tell you something about where I was before I understood any of this. In the early days of my career, I was working with a stockbroker in Chicago in the late 1970s. I thought I understood markets. I thought because I could read price, because I knew the fundamentals, because I was smart, I had an edge, I was confident, maybe overconfident, and I paid for it. During my years of working as a retail stockbroker, I watched several of my clients lose almost everything to the commodity markets. These were people who had real money, real experience, and I watched the market take it from them piece by piece while they convinced themselves each time that the next trade would fix everything. That experience broke something open in me, because I realized I was doing the exact same thing, just with smaller numbers. I was letting losses run because I couldn't accept I was wrong. I was cutting winners short because I was afraid the market would take them back. I was overtrading because I needed to feel in control. And every single time I sat down to analyze what went wrong, the answer I came up with was the same. I need a better strategy. I need more information. I need to study harder. But that was never the real problem. The real problem was something I didn't want to face, something most traders never face. And it took me years of pain, years of study, years of sitting with my own patterns to finally understand it. The market wasn't the problem. Here is the most important thing I ever learned about trading. And I need you to really hear this. The market is not your opponent. Think about that for a moment. The market doesn't know you placed a trade. It doesn't care about your analysis. It doesn't respond to how hard you studied, how long you waited for your setup, or how much money you need to make this month. The market is simply a stream of information. It reflects the collective actions of every single participant: institutions, retail traders, algorithms, hedge funds, all acting in their own interest, all at the same time. That stream of information doesn't owe you anything. But here's what we do. We personalize it. We make it about us. When the market goes against our trade, we feel like it's attacking us. When it stops us out and then reverses, we feel cheated. When we miss a move, we feel left behind. When we win, we feel validated. None of those interpretations are accurate. None of them. The market is neutral. It is completely, brutally neutral. And the moment you accept that, I mean genuinely accept it, everything changes. Because once you stop making the market about you, you stop trading with your ego. And trading with your ego is the single most expensive habit a trader can have. Let me show you what ego-driven trading looks like in real life. You take a trade. It goes against you. Instead of cutting the loss at your stop, you move the stop further out. Why? Because somewhere in your mind, you believe that if you just hold on long enough, you'll be proven right. You're more committed to being right than to protecting your capital. That's ego. And that ego, in that moment, is costing you money. Or you take a trade. It goes your way. You're up. But instead of following your plan and letting it run to your target, you close it early. Why? Because you're afraid of losing the profit you already have. You'd rather lock in a small win than risk being wrong about the direction. That's also ego, and that ego is slowly strangling your profitability. Both of those behaviors come from the same root, a fundamental misunderstanding of what trading actually is. Trading is not about predicting the future. I know that sounds absurd, but I want you to think about how you actually behave at the chart. Because most traders behave as if they believe their analysis creates certainty. They study a setup, they build a case, and then somewhere in the back of their mind, they expect the trade to work. Because their analysis said it should. And when it doesn't, they're confused. They're frustrated. They start questioning their strategy. They start questioning themselves. But here's the truth that changed everything for me. Every single trade you take is just one outcome in an infinite series of random events. That one trade? It means nothing. It tells you nothing about your edge. It tells you nothing about your ability. It tells you nothing about whether your strategy works. Because any single trade, no matter how perfect the setup, can lose. And any single trade, no matter how terrible the setup, can win. The market doesn't know your setup was perfect. The market doesn't care. What matters is not whether this one trade wins or loses. What matters is whether your edge, your real statistical edge, plays out over a large enough sample of trades. Think about a casino. The casino doesn't worry about whether a single player wins on a single hand. They know that over thousands of hands, the house edge will play out. They don't need any one hand to go their way. They just need to keep the table running. That's the mindset of a consistently profitable trader. Each trade is just one hand at the casino table. The outcome is irrelevant. The process is everything. When I finally internalized this, something shifted in me. I stopped caring about whether I was right. I started caring about whether I was disciplined. And those are two completely different things. So let me tell you what I started doing differently that actually changed things for me. The first thing I did was accept, truly accept, that I could not control outcomes. I could only control my behavior, my risk, my execution. That sounds simple, but most traders spend years fighting that reality. The moment I stopped trying to control what the market did and focused entirely on controlling what I did, the emotional weight of trading got lighter. Because I wasn't responsible for whether the trade won. I was only responsible for whether I followed my rules. The second thing I changed was how I thought about a series of trades. I stopped evaluating myself after every single trade. I started thinking in blocks of 20, 30, 50 trades. After 50 trades, did my edge show up? That's the only question that mattered. This shift, from single trade thinking to series of trades thinking, is what killed my urge for revenge trading. Because when you're thinking in a series, one loss doesn't mean anything. It's just one data point out of 50. You move on. You take the next trade. You trust the process. The third thing I did was something that felt uncomfortable at first. Before every trade I entered, I made a full commitment to the risk. I said to myself, "This money is already gone. I have accepted this loss. Now let's see what the market gives me." When you do that, when you genuinely release your attachment to the money before the trade even starts, you don't panic when it goes against you. You don't move your stop. You don't stare at the screen hoping and praying. You've already made peace with the worse outcome. And that peace is what lets you trade clearly. The fourth thing, and this one took me the longest, was rebuilding my relationship with being wrong. My entire professional identity before trading was built on being right, on being smart, on having the correct answer. And the market kept proving me wrong over and over, and I kept taking it personally. The shift happened when I started seeing being wrong as neutral information, not failure, not embarrassment, just data. The trade didn't work. What does that tell me about market conditions right now? Okay, what's the next setup? That's it. No drama, no attachment, just information and action. Here's something I want you to understand about why this is so hard. Every belief you have about success, failure, risk, and reward was formed long before you ever saw a chart. You were taught that hard work produces results, that if you're smart and you prepare, you'll win. That being wrong means you failed, that losing is bad and winning is good. These beliefs served you everywhere else in life. But in the financial market, these set of beliefs will destroy you. The market doesn't reward hard work in any single session. The market doesn't validate your intelligence on any single trade. Being wrong sometimes is part of having an edge, and losing is just the cost of doing business. Until you replace those old beliefs with beliefs that are actually compatible with how the financial markets works, you will keep self-sabotaging. Not because you're weak, not because you're stupid, but because your brain is running a software that was never designed for the financial market. The work of becoming a consistently profitable trader is not the work of finding a better strategy. It's the work of updating your belief system, of rewiring how you think about uncertainty, risk, loss, and randomness. That is internal work. And most traders never do it because it's uncomfortable. It means admitting that the problem isn't the market, isn't your broker, isn't your strategy, but the way you think. Understanding everything I have said intellectually isn't enough to make any change. Here's how to actually apply this in real time, so that you can start getting the results you deserve. Step 1. Before you open the chart, set your mental frame. This step is more important than you may have assumed. Say this to yourself before every session. I do not know which trades will win today. I do not need to know. My only job is to follow my rules on every setup that qualifies. That's all I'm responsible for. This should take about 30 seconds or even less, but it separates your identity from your results before the session even starts. Step 2. Pre-accept the risk on every trade. There is something I want you to understand as to why this step is much needed. On every single trade you open, the surest outcome is a loss. So, before you click enter on any trade, ask yourself, if this trade goes wrong right now, am I genuinely okay with the amount I will lose? If the answer is no, if there is any hesitation, reduce your position size until the answer is yes. This is non-negotiable. You cannot trade clearly with money. You cannot afford to lose emotionally. Step 3. Define the trade before you take it. Then let go. Entry. Stop. Target. Written down or clearly decided before you enter. Once you're in, let go. Stop watching every tick. The trade is either going to work or it isn't. Your staring at the screen doesn't change that. Trust the trade or don't take it. Step 4. Journal every session with one focus. Not profit and loss. Not whether your setups worked. Ask yourself one question after every session. Did I follow my rules? If yes, that was a successful session, regardless of the result. If no, where did I break them and why? That's the data that actually makes you better. Step 5. Start tracking your results in batches, not individually. Every 20 trades, review your numbers. Win rate, average win size, average loss size. Over time, does your edge show up? This is how you build real confidence. Not from a string of winners, from evidence that your process works across a large sample. Step 6. When you feel the emotional pull, pause. When you feel the urge to revenge trade, to move your stop, to size up after a loss, to exit a winner too early, stop. Don't act. Take a deep breath. Ask yourself, is this part of my rules, or is this my emotion? If it's your emotion, close the platform. Come back tomorrow. The market will be there. Protecting your discipline at that moment is worth more than any trade. I want you to picture something. Imagine showing up to your charts tomorrow with zero attachment to whether any individual trade wins or loses. Imagine placing your trade, setting your stop, setting your target, and then walking away. No anxiety, no screen watching, no hope, no fear, just execution. Imagine reviewing your session at the end of the day and asking only one question. Did I follow my process? And the answer being yes, and feeling genuinely satisfied with that, even though you had 3 losing trades on that day. That's what this work builds. That's the confidence you will derive from following these steps religiously and consistently. Your results won't change overnight, but your relationship with uncertainty does. Your relationship with loss does. And over time, over hundreds of trades, that new relationship produces something that no strategy, no indicator, no signal service can give you. That's consistency. Not because the market started cooperating, but because you stopped fighting it. The traders who became successful trading the financial market were successful not because they found a secret. They become successful because they did the uncomfortable internal work that most traders are too afraid to do. They looked at themselves honestly. They accepted what they found. And they changed. That path is available to you. Right now. The question is whether you're willing to do the real work.